Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and yes, there is not much crazy volatility right after market opening. We can see the market is behaving like a typical Monday market. Right now, gold is standing at 2081 after the market opening. We could see some minor correction or retracement and which was quite obvious. So the levels or the trading opportunities that we discussed on Saturday are still very much valid. And if we go through the market sentiment, you can see gold steady, more weak data needed for rally to extend further. And if we look at the economic calendar, market is talking about the next big event, which is coming on Friday, that is NFP. If you are a forex trader, you must be knowing that first Friday of every month is very important for a forex trader because of the NFP, because of the volatility in the market. NFP is a big event, and NFP also gives a direction to the market. So we can see that gold is showing some retracement, and market sentiment is saying that to continue the upside, we need further fall on DXY, which is only possible if fundamentals give support to that. So we need to wait for till Friday for a big move. But before Friday also, you can see that we have many news coming up. Okay, so there will be some volatility, or you can simply say that there will be some craziness during the US session. So my dear friends, be careful. First of all, let's look at the chart of dollar index, US dollar index, or DXY. So we can see that DXY is still inside the range, and as we have already discussed, to continue the upside, DXY will have to cross 104.20 and extend the upside. But chances of DXY breaking the resistance and going up is very less because there is no support from the fundamentals. And because of the ongoing market sentiment, there is a possibility that we may see DXY going down. DXY may head towards 103. So let's wait and watch. But before 103, DXY will have to cross 103.40. Now let's look at the chart of bond. US government bonds have been playing a major role. So after this big fall, we can see that after the market opening, bond market is showing a pause. And the best thing is that we can see the 200 moving average is also coming up to provide support to the market. So if market bounces from here, then we will see some stability on the chart, or we will see some correction, some selling on gold because there is a opposite relation with the bond. But in case market surprises us with a big red candle because of the ongoing weakness, then obviously we will see upside on gold. So if you are a lover of gold, you need to keep your one eye on US government bonds. The next support on the chart of bond market is 4.150%, where we have the FIBO 38.2% retracement level, as well as previous support we have. The previous resistance will also be acting as support. If we combine all the factors, at least we can expect a bounce around this area. Rest the market knows. Now let's look at the chart of gold. And my dear friends, the English workshop is over. Thank you so much for such an overwhelming response. Sometimes I get emotional that because I never imagined that I will get so much love from all around the world. Thank you so much. And many of you have missed the workshop and you were asking about the dates. See, I conduct a workshop 3 times to only 4 times a year because this workshop is not for profit making purpose. That's why to keep the fees lowest, I conduct the sessions only in my free time. That's why it's possible only 3 to 4 times a year. The next workshop will be around in June or July, I guess. Okay. Anyways, the Hindi workshop is coming up. If you're interested, you can still be a part of the Hindi workshop. All the details are on the website and nothing much to discuss. Okay, let's look at gold. So my dear friends, gold, if we look at the chart of gold technically, okay, Listen to me carefully. Okay. So if you look at the chart of gold, technically we can see the market is standing at resistance. But why did gold went up? Gold went up because of the weak fundamentals on dollar, and after that market started going up. So we had a fundamental reason. Okay. We had a fundamental reason. So when fundamentals dominate the market, resistances do not work. We all have seen at the time of news. But the news was not that special also. For example, PC data. If you have been trading on forex for a while, then you must be knowing that PC data is not that important, but this time it became very important. Okay, so this was little bit surprising or unexpected also, you can say. Right now we can see the resistance is working, but because of the ongoing market sentiment, taking a sell at the resistance can be very dangerous, because when the fundamentals have the impact, okay, we may not see a trend reversal, or we may not see a huge sell-off from the resistance. And if we look at the candles right now, we do not see huge candles. But still, if you have taken a sell somewhere around here, somewhere around 2085 2087, you can be on the trade, because further retracement is possible. Why further retracement is possible? Because no market in the world goes up in a straight line, goes down in a straight line. Okay. So all the markets around the world will have to come for retracement. And if you look at the chart of gold, we can clearly see market is standing at the top. I'm not talking about any trend reversal here, because for a trend reversal, we need a fundamental factor like NFP that will bring the market down. But without fundamentals also, okay, we need, for demand and supply, we need the market to come down for retracement. So I have my buy limit at 2050. I have my buy limit at 2050. I will also look for a buy around 2063, but I have not placed a buy limit at 2063 yet. But yes, I am also waiting for a deep retracement, because market cannot goes up always like this. And as we saw on the news, that more weak data needed for rally to continue further. So before the big event, okay, there is also a possibility that we may get to see a market like this. We may get to see market within the range of 2090 and 2050, and market just may remain sideways. Okay, so what are the opportunities? And first of all, if you already have a buy position on gold as a positional trader, swing trader, no need to exit, be on the trade. If you have taken a sell on gold at 2085 2086 area at the top at the resistance, you can still be on the trade, because still little bit of downside is possible, if not trend reversal. And if you are looking for fresh position in the market, okay, then it's better to wait for the market to come down for retracement. We have already discussed in our Saturday video, the first retracement level is around 2063. So volatility of the market will be playing a very important role here. So the first level is from FIBO 0.236. If market comes to 2063 2064 area, 2063 2064 area, we can look for a buy if you see the market is taking support, especially during the Asian session and European session. We can clearly see on the economic calendar that almost every day we have a news coming up. During the US session, there will be volatility. So at the time of US session, it may not work, especially the FIBO 23 may not work. In that case, you can look for a buy around 2048 to 2050, because we have FIBO 38.2% retracement level. The previous resistance will also be acting as support around this area. So these are the two levels where we can look for buy at retracement. And sometimes market doesn't come for deeper retracement, because market is still standing at 2080, 2050, 2063 are far away from the current market price. In that case, we can also look for a buy around 2072 or 2078. 2072, 207 are not that reliable, but still as a day trader, we can look for some opportunity. If there is an opportunity, that doesn't guarantee or mean that definitely we will get a trade, but still we are traders, we can look for some opportunities. So to derive this level, again we are using Fibonacci, because in market condition like this, the static support resistance do not work properly. The dynamic ones are also far away. So we are using FIBO again, and while using FIBO we can see that we have FIBO 0.236 at 2078. Personally, I am not planning to take any trade around 2078, but yes, I may look for a buy around 2072 if market shows that the market is taking some showing a price rejection from below or hammer kind of a pattern. How much will I be expecting? I will not expect much here, but I will be looking for 30 to 40 pips. If market continues the rally, then I may continue my buy position. Okay, but as of now I'm just waiting. I have my buy limit at 2050 and I have my alert set at 2065 because 2063 is the level. Okay, obviously I'll have to be ready before the market hits the level, so 2065 is my alert, and I'm not sure about 2072 as of now. Okay, 78, no, I'm skipping. And as we all know that the market is full of surprises. So if market doesn't come for retracement, sometimes yes, market doesn't come for retracement. So if market doesn't come for retracement, then we can look for a buy and breakout above 2089, this level here. If you see that there's a sudden buying in the market is going up with a big green candle, you can go for a buy above 2089. The first level will be 2100, the resistance, because of some psychological reasons. But if we zoom out the chart, okay, we can expect the resistance to be around 2110. If not a trend reversal from 2100, but at least we can expect some sort of weakness, some sort of reversal, temporary reversal around 2100. So let's not talk about buy at breakout as of now, because I know that many of you are holding a sell. So I'm open both the sides. So not both, open to trade on both the sides. Let's wait and watch. Thank you so much, my dear friends. Bye bye. Take care, and please be careful with your open positions. Do not gamble. Market volatility. Okay, market volatility is very lucrative. Okay, we think that we can make a lot of money when the market is volatile, but sad reality is that most of the traders also lose money when the market is volatile. Okay, do not forget, we are traders, not gamblers. Bye bye. Take care.